I guess, setups or environments that we've been through in the past. So I don't think Keith Neumeyer's $100 silver is unrealistic. My forecast is that, again, in a mania phase, ultimately it could easily run well above that. I don't think it would stay there. It would wreak havoc on industry, of course, which consumes lots of silver. They would be looking to substitute. It would price their products out of the market. And again, I don't think it would necessarily be sustainable, but is it attainable? That I do think it is.
Well-known figure Keith Neumeyer, CEO of First Majestic Silver, believes the white metal could climb even further to hit the $100. Neumeyer mentions the deficits in the silver market as contributing to a coming increase in silver prices. Distinguished financial analyst and the great silver bull editor PeterKrauth challenges Keith Neumeyer's assertion of $100 silver, proposing that the price could surge beyond that mark, aiming for a much higher target. Regarding his projection for the future price of silver, Krauth explains that this price could be reached during a mania phase driven by intense demand and fear of missing out, similar to the surges seen in 1980 and 2011. Krauth's methodical approach, based on historical data and indicators like the gold-silver ratio, suggests a bullish outlook for silver. Assuming a future gold price of $5,000, he projects silver could reach approximately $300 if the ratio returns to 15-1. Even with a more conservative 30-1 ratio and a gold price of $10,000, silver would hit much higher. The main reason for this sudden rise in silver prices is the gold and silver ratio. In other words, even with the recent rally in the silver price, the gold-silver ratio is still above the 20-year average and far above the average in the modern era. This indicates the price of silver still needs to increase by a sizable amount to close the gap. Additionally, Krauth factors in true inflation at 7 to 8%, adjusting the 1980 peak silver price of $50 to a current value range of $240 to $360. Silver prices reached an 11-year high on Monday, driven by economic data that has strengthened expectations for interest rate cuts by the U.S. Federal Reserve. Recent inflation data has contributed to this bullish outlook for silver, with traders focusing on the Fed's upcoming policy meeting minutes for further guidance. Now, we present the clips of PeterKrauth's insights from his recent interview with Axino Capital. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
If you look at something like $300 silver, it looks sensational. My goal is not to be sensational. It's basically to look at what I think an ultimate target, an ultimate high could be. And I'm talking about in some kind of a mania phase for the silver market, where you would have just absolute, people are losing their minds. They have to have silver. You've got this fear of missing out, this FOMO happening. People can't get enough silver and can't get it fast enough. So, we've been in those kinds of environments before. That's partly what drove it to $50 back in 1980, and partly again to say $49 or almost $50 in 2011. When I looked at what I thought could be an ultimate high in the silver price, I did it in what I feel is a rational way. I looked at history and I looked at different indicators and different metrics. And I applied them to silver now. And I said to myself, okay, well, what target does that suggest? One of the widely followed and most easily understood is the gold-silver ratio. And the gold-silver ratio is very simply, for your viewers, the number of silver ounces it takes to buy 1 gold ounce at any given point in time. Right now, it's about 90. So it takes you 90 ounces of silver for the equivalent of buying 1 ounce of gold. And that's high historically. But if you look at what happened in the last true silver bull, let's say, I'm going to say secular silver bull, which was in the 1970s, the gold-silver ratio bottomed around 14 or 15. Used what I feel were you have to make assumptions. This is the only way you can work with these numbers and apply the indicators. So I made an assumption for myself that ultimately in this secular bull market, that gold would reach, say, $5,000. Now, we're close to 40% of that target, and people are already talking about maybe $2,500 this year, talking about maybe $3,000 perhaps even next year. So I don't feel $5,000 gold seems all that unattainable anymore. But if you apply the gold silver ratio with gold at $5,000 and you apply just 15 to 1, you're at $333 silver. So that to me is close enough to $300. Then what I did, so that's one way that I got to somewhere close to $300 for silver. And as I say, we've seen that if you use, some people think gold will go to $10,000. If you use $10,000 gold and you use a higher gold to silver ratio, let's say 30. So that's easier to attain. It's not as low. But with $10,000 gold, you're still at $333 silver. So that's the gold silver ratio indicator. Then there's inflation, and what I call, say, true inflation rather than, the headline inflation, which is, say 3% or so lately. I'm being, I think, very reasonable, and I'm saying true inflation is closer to about 7 to 8%. So if you go back to 1980 and you adjust the silver price from its peak in 1980 at $50, and you project even just to today with 7 or 8%, then you get a range of, say, at 7, $240, and at 8%, $360 silver. So I go in between and I say $300 again within that range. Again, seems fair.
Despite ongoing structural deficits in the silver market, PeterKrauth notes that silver prices have remained relatively low. This discrepancy raises questions about where the silver is sourced, given the strong demand, especially from industries like solar energy, which have significantly increased their silver consumption. Silver production remained flat despite a nearly 20% increase in demand last year, according to data from the Silver Institute. The global silver deficit is anticipated to increase by 17%, reaching 215.3 million ounces in 2024. This rise is attributed to a 2% growth in demand, primarily driven by robust industrial consumption, coupled with a 1% decline in total supply, as the Silver Institute Industry Association reported. Meanwhile, Krauth has observed a steady decrease in silver inventories in recent years, indicating a depletion of secondary supplies. He theorizes that large silver consumers may be purchasing long futures contracts and ETFs, and then demanding physical delivery, potentially influencing market dynamics and capping silver prices. Let's get back to the interview.
Why has silver underperformed? And that's a question I've been asking myself for quite some time. And obviously I've been getting that question from many. So a few months back, I decided to do some research and look for what I thought might explain, why, if we've been facing structural deficits in the silver market for about 4 years now, from 2020 until even last year, and we're expecting another structural deficit this year. If we're facing deficits and demand is so strong for silver, so supply is not meeting demand, where is the silver coming from? And why is that price seemingly facing a ceiling of maybe, say, $26, $28 or so for the last 3 years? I had a feeling, or I had an impression that the large consumers were getting their silver somewhere, because you could have a deficit for a year or maybe two, and someone will try to adjust in terms of their requirements, but at some point they need to get the silver. And now we're in a market where about 60% of the annual demand is going just to industrial. And a large part of industrial is solar. And we know the growth of solar has been tremendous. Just in the last decade or so, solar panels have tripled their requirements of silver just because so many solar panels are being manufactured. These large consumers of silver are getting their silver somewhere. If you look at, so the way the silver market works is that you have a certain amount going to industry, which is about 3/4 of the physical, and then about a quarter goes to investment demand. In a year when you have oversupply, in other words, if you combine mining and recycling, and that's your total supply, and demand overall is below the supply, then the surplus gets pushed into the futures markets and it gets absorbed by ETFs. So they accumulate stockpiles, let's say, which I call secondary inventories or secondary supply. That's my term. This had been building up for probably about 7 or 8 years up until about 2020, 2021. And if you look at the charts from the three major futures exchanges, there's the COMEX in New York, you have the LBMA in London, and then the Shanghai Futures Exchange in China, of course. Their overall silver inventories have fallen about 40 to even 50% in some cases in the last 3 to 4 years. So we had not seen this phenomenon until just the last few years. So you see a steady decline, gradual, every quarter, every year of silver supply or silver inventories in those markets. The same had been happening with the silver ETFs. And I've done some research with the SLV, which is the world's largest silver ETF. It's something like $10 billion of worth. It has about, I think it's over 440 or 450 million ounces of silver. This ETF was started in 2006. And if you follow the silver price and you follow the silver holdings, because it's backed by silver, apparently, that's another story. And so you look at the silver inventories in the SLV ETF, even when you had silver spikes and their silver holdings would move up, when you had corrections in the silver price, you would rarely have any kind of sustained correction in the amount of silver that they held. In other words, people were still overall buying that ETF. And it's only in the last 3 years that despite the silver price being stable, the holdings in the SLV ETF has also been drained, very much like the futures exchanges.
In 2024, the silver price is expected to reach new highs, driven by rising demand and global economic conditions. Based on historical ratios, inflation adjustments, and reasonable assumptions about future gold prices, a silver price target of around $300 is achievable in a bullish market scenario. How do you anticipate the recent surge in silver prices, coupled with predictions of further gains, will impact your portfolio diversification strategies? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.